The value of the US dollar is always changing depending on what is happening in the economy in the US and around the world. This makes it tough to say if a strong dollar is a good or a bad thing. Basically, a strong dollar just means it is worth more compared to other currencies than it was before, so you can buy more foreign stuff. For example, if you're traveling overseas, a strong dollar is great because you'll get a better exchange rate, making things cheaper for you. But while a strong dollar can be a plus for travelers, it has its downsides too. A strong dollar makes US goods more expensive for people in other countries. If American products become pricier for foreign buyers, the demand for these goods might drop. This is especially tough on industries like manufacturing, which rely on selling products to other countries. When fewer people abroad can afford to buy American goods, businesses in these sectors could see a drop in sales. This can even lead to layoffs, especially in areas like manufacturing that are closely tied to global trade. We have seen this happen before, like in the early 80s and again in the early 2000s, when a stronger dollar led to job losses in manufacturing. On the flip side, when the dollar weakens, American goods become cheaper and more attractive to foreign buyers. This is a boost for US companies that sell products abroad as more people can afford to buy what they are selling. A weaker dollar can help boost economic growth because it makes US exports more competitive in the global markets. But it is not all good news. When the dollar weakens, it also makes imports more expensive. This means American consumers and businesses have to pay more for goods coming from other countries, which can lead to higher prices on things like electronics, cars, and even some food products. Looking at the US dollar's performance from 2006 to 2023, it's clear that there have been some big swings in its value. From 2006 to 2008, the dollar dropped, losing value both nominally and in real terms. Then after 2009, the dollar started to strengthen again, peaking around 2015. There were a few ups and downs, but recently, especially between 2021 and 2022, the dollar hit some of its highest levels in years. This rise in value is due to a mix of factors like change in interest rates and shift in global demand for the dollar. Understanding these swings helps explain why the dollar's strength is never just good or bad, it all depends on how you look at it. The US dollar's value has been strongly tied to inflationary pressures and interest rate policies. When inflation started to rise sharply in 2021, the value of the dollar began appreciating significantly. This was further accelerated in 2022 when inflation became a more pressing issue and the Federal Reserve had to take action to control it. The Fed raised interest rates in March 2022 in an effort to cool down the economy and bring inflation under control. The rise in rates put upward pressure on the dollar, making it more valuable compared to other currencies. Higher interest rates typically attract investors who are looking for better returns, and the dollar becomes a more attractive investment option. While the US offering higher returns on investments like government bonds, international investors flock to the dollar, increasing its demand and thus its value. This is what led to the strong appreciation of the dollar through 2022 and 2023, as seen by the increase in the dollar index during that period. The dollar reached a peak of around 108 in early 2024 before starting to decline. By September 2024, the dollar index had dropped to approximately 101, reflecting a significant decrease. This decline indicates that investors are now anticipating rate cuts from the Federal Reserve as inflation cools and economic growth slows. As the expectation of lower interest rate grows, the appeal of dollar-based investments decreases, leading to a drop in the value of the dollar. But interest rates are not the only factor influencing the dollar's value. Trade policies, including tariffs, also play a role. The US dollar is the world's dominant currency, used by many countries for international trade and as a benchmark for their exchange rates. When tariffs are imposed on imported goods, it can shift the balance of trade, which affects the demand for and value of the dollar. For example, during the Trump administration, tariffs were imposed on Chinese imports to reduce trade imbalances and protect American industries. While the intention was to protect jobs, the impact of tariffs on the dollar was mixed. On one hand, tariffs can make the dollar stronger because they make U.S. goods more expensive abroad. This is because the value of the dollar increases relative to other currencies. However, this makes American exports less competitive, hurting industries that rely on selling products to other countries. This was evident with the Trump-era tariffs on steel and aluminium. These tariffs increased the cost of these materials for U.S. manufacturers, making American-made products more expensive and less competitive in global markets. In the end, the tariffs did not lead to a significant increase in jobs in the steel and aluminium industries, but they did raise production costs for many manufacturers. Even under President Biden, tariffs remain in place on Chinese goods. In 2022, tariffs were imposed on $18 billion worth of Chinese imports, continuing the protectionist stance initiated by the previous administration. Many experts argue that these tariffs may have contributed in the dollar's strength by creating trade imbalances. When trade imbalances are large, they can lead to instability in the currency markets, potentially driving up the value of the dollar. At the same time, however, tariffs can hurt American consumers and businesses. When tariffs are imposed, the cost of imported goods rises, making everyday products more expensive. American manufacturers that rely on imported materials to make their products also see their costs rise. This was the case with the Trump tariffs on steel and aluminium, when the higher prices of imported steel and aluminium made American manufacturers less competitive, leading to higher costs for consumers. The value of the US dollar has always been a major point of discussion in both economic and political contexts, particularly regarding its role as the world-dominant reserve currency. Throughout history, presidents have had varying opinions about the Federal Reserve's policies and the dollar's management. While most leaders usually refrain from directly commenting on monetary policy to preserve the Fed's independence, Donald Trump was an exception. He openly criticized the Fed's reserve's actions and expressed his views on the direction he believed the dollar should take, a rare move in U.S. policies. The Federal Reserve is responsible for managing U.S. monetary policy, primarily by adjusting interest rates to control inflation and stimulate or slow down economic growth. However, the Fed's actions are not always perfectly timed. Trump's frustration with the Federal Reserve stemmed from his belief that their actions, whether early or late, could significantly impact the U.S. economy. Unlike most administrators that stay silent on the Fed's decisions, Trump's administration openly criticized the Fed's interest rate policies, especially when they did not align with his growth-driven agenda. Interest rate hikes, especially those seen in 2022 and early 2023, played a pivotal role in influencing the dollar's value. When inflation surged, the Federal Reserve raised interest rates to cool down the economy and rein in inflation. Higher interest rates tend to make the dollar more attractive to investors as they can get better returns on U.S. investments such as government bonds. This increased demand for the dollar drove its value up through 2022 and into 2023. However, as inflation began to cool by mid-2024, expectations of rate cuts began to emerge, which contributed to a weakening dollar. Lower interest rates make dollar-dominated investments less attractive, leading to reduced demand and a decline in the dollar's value. Many experts argue that these tariffs contributed to trade imbalances, indirectly impacting the dollar's strength. Large trade imbalances can create instability in the global currency markets, often driving up demand for dollars, which further strengthens the currency. However, this strength is not always beneficial for U.S. industries that rely on exports. A stronger dollar makes American goods more expensive for foreign buyers, reducing demand for U.S. exports. At the same time, the strength of the dollar affects consumers and businesses differently. When the dollar is strong, importing goods from abroad becomes cheaper, which benefits consumers who buy foreign products and companies that rely on imported materials. But a strong dollar can hurt businesses that rely on exports, as their products become more expensive and less competitive in international markets. This was a key issue for the manufacturing sector, which faced declining competitiveness due to the stronger dollar during the Trump and Biden administration. Historically, presidents have taken direct action to influence the dollar's value. One significant example is President Richard Nixon's decision to suspend the gold standard in 1971, effectively allowing the dollar to float freely in international markets. This move led to the depreciation of the dollar, which contributed to inflationary pressures during the 1970s. Similarly, President Ronald Reagan worked with other global economies to depreciate the dollar in the mid-1980s, aiming to reduce trade imbalances. Reagan's efforts were a coordinated international operation which helped manage the decline of the dollar without causing too much disruption. Apart from the monetary policy and trade policies, the fiscal position of the U.S. government also plays an important role in determining the dollar's value. Large fiscal deficits, particularly those financed through borrowing, can weaken the dollar over time. While the president does not have direct control over fiscal policy, Congress plays a significant role. Presidents can influence fiscal decisions through their political leverage. For example, the president's ability to advocate for tax policies or spending cuts can indirectly impact the dollar's strength. Looking to the future, the long-term stability of the US dollar remains a topic of discussion. Some argue that the dollar's dominance as the world's reserve currency may not last forever, especially with the rise of cryptocurrencies and other alternative currencies. Senator J.D. Vance, formerly President Trump's running mate in the 2024 election, has voiced concern about the dollar's reserve currency status. He argues that while the dollar's global dominance benefits U.S. consumers by making foreign goods cheaper, it also acts as a tax on American producers by making U.S. goods less competitive in international markets. Despite these concerns, it's important to recognize that the U.S. dollar's status as the world's reserve currency has a strong hold. The dollar is considered a safe haven during times of global uncertainty, backed by a strong central bank, a large bond market, and the military power of the U.S. Whenever geopolitical tensions or global economic crises arise, investors flock to the dollar, driving its value up. So policymakers must keep a close eye on these factors as they navigate the future of the U.S. dollar in an ever-changing global economy.